Woke up this morning, prices through the roof, CPI is spiking, and that's no cap, it's proof. The MPC is meeting, they gotta make a call. The MPC is meeting, they gotta make a call. Raise the interest rates up, or watch the spending fall. It's given, cost push vibes, it's given. Demand pulls sides, but the central bank said, bestie, we got this. Raise the rate, make borrowing hurt a little more today. Cool the spending, tighten up the money supply, slay the inflation, watch those prices die. Raise the rate. But here's the T, the transmission lag is real. You hike the rate in March, but households barely feel it. 18 months go by before the vibes shift through. Mortgage gets spicy, firms go, what do we do? Credit cards get scarier, loans become a drag. Consumer confidence is low-key on the nag. Aggregate demand starts sliding output too. The trade-offs hitting different, unemployment's due. But are we sure this tool hits straight? No cap, it's blunt, it can't pick who gets hurt the most. The workers lose their jobs, while sticky prices coast. Now here's where it gets nuanced, don't sleep on this part. Monetary policies got limits right from the start. If inflation's cost push, supply side's the blame, then hiking rates won't fix it for supply side crime. And if the economy's already in a slump, the Phillips curve will shift, no short run trade-off left. Stagflation's the vibe, that's economic theft. But real talk, dependent banks keep politics away. No government gonna cut rates just to win election day. Credibility is key, inflation expectations low. When people trust the bank, the price stability will flow. Watch that and draw low, people trust the price stability will flow. Compare it to fiscal, that takes forever, bestie. Please, tax cuts need a parliament. Monetary's got the keys, speed is the advantage. MPC votes, it's done. Though fiscal hits more sectors when the targeting's begun. It's not perfect, it's not free, but it's the main tweak, don't you see? Weigh the pros, weigh the cons, evaluate with care. Four-part answers, both sides, show the examiner you're there. And in the end, the rate you raise is equal to the inflation you tame. But only if the cause is demand and expectations aren't already out of hand and the lag's not long and the economy's strong, the currencies appreciates along. Evaluate both sides, no cap.